Hello, everyone, and welcome to the broadcast. I hope you guys are doing well. If you're new, thank you for tuning in. And I hope you like the video and please share with everyone in your world. Subscribe to the broadcast, the channel, and I hope to see you back again in the School of Business. If you are returning, thank you for your support. As you would have known if you've been watching my videos, I have been doing a series on government funding, federal funding to be specific. And it's a 5-part series. And today I'm going to be doing the number 3 in the 3 of 5. In the series. As you know, if you've been watching the videos, as I've said, federal funding is a 2-tiered process. You have the contracting side, which I've already covered. This is where you can apply for federal contracts. There are different contracts that are called set-asides, meaning they're set aside for businesses that have particular qualifications. And so you can apply for those particular contracts. For details on that, you can go check out my videos to get the details. And of course, there's information as to how you can further contact me for more details as to how to navigate the process so that you can successfully garner a federal contract. On the other side, we have the loan and other loan and funding programs. So you've got contracts on the left, loans and other funding programs on the right. And today in episode 3, I'm covering the different loan and funding programs. I'm going to be talking about the first, this episode will be about loan programs. Next episode 4, I'm going to cover U.S. Department of Agriculture. And episode 5, I think I'll be covering the USDA in the Department of Commerce. So guys, there are so many different avenues of loan programs and funding opportunities from the federal government. So let's get right into it. So loan programs are administered by the SBA. And I'm going to cover 3 of those today, the 3 that are administered by the SBA. They are the 7A loans, 504 loans, and the equity investment funding, which falls under the Small Business Development Company, otherwise known as the SBIC. Now, the 7A loan program is the most common SBA loan program. And it is loan programs for that provides financial help for small businesses with special requirements. This is the best option when real estate is part of a business purchase, but it also can be used for short and long-term working capital, refinancing current business debt, purchasing furniture, fixtures, and supplies. Key eligibility factors are based on, of course, what the business does to get its income, credit history, and where the business operates. Those are just the basics. And further, the business must operate for profit. In other words, it can't be a nonprofit. It must be considered a small business as defined by the SBA, do business in the US, have reasonable equity invested in the business, use alternative financial sources, be able to demonstrate the need for the loan, and use the funds for a sound business purpose and not be delinquent on any existing debt obligations to the US government. So those are the basic eligibility requirements. Of course, there are more, to include, there are more eligibility requirements, but those are in the weeds, in the fine print. And that is where someone like me would come in to kind of help you navigate through the process. And you can use the 7A loan program funds, as I said before, short and long-term working capital. You can use it for equipment, machinery, etc., purchase of real estate, construction of a new building, establishing a new business, or assisting in the acquisition of an existing business, refinancing existing business debt. This is a big one, guys, because invariably most businesses have some form of debt, and the business can sometimes succumb because of the level of debt, as it does not line up with the revenues that the business is taking in, especially if it's just starting. It's in the first 2 to 3 years of operation. You can also use the proceeds for the repayment of loan terms, including monthly payments of principal and interest. So that is an overview, guys, of the 7A loan program administered by the SBA. As I said, for more additional information, you can always reach out to me. You can find my information. I'll put that in the description box. You can connect with me on social media and via email. So let's move on to the next loan program, which is the 504 loan program. And this program provides long-term fixed rate financing for major fixed assets that promote business growth and job creation. So this loan is available through CDCs, and these are SBA community-based partners who regulate nonprofits and promote economic development within their communities. So if you're a small business owner in a particular community and you've been doing your research, you know that there are community development centers scattered all over the community. And the majority of them is usually tied to an educational institution, such as a university or college, where business owners can go to get support resources and other things they might need to advance their business. The maximum loan amount for a 504 loan is $5 million. For certain energy projects, however, the borrower can receive up to $5.5 million per project. Eligibility: have to operate as a for-profit company in the US, have a net worth of not less than 15 million, of less than 15 million, have an average net income of 5 million after taxes, having qualified management expertise, very important, guys, because you want to know, the SBA want to know that the principals are qualified to administer this loan and spending it wisely, so that not only will it profit the business, but they're also able to repay the loan. The business must also have a feasible business plan, good character, and the ability, as I said before, to repay the loan. This loan can be used for existing buildings or land, new facilities, long-term machinery and equipment, land, streets, utilities, parking lots, and landscaping. Can also be used for existing facilities. And the repayment terms, both 10 and 20-year maturity terms, are available. So that, in a nutshell, is a 504 loan program. I'm now going to move on to the Small Business Investment Company Equity Investment Program. And this is a horse of a different color. It's a loan, but not a loan. So let's get into it. The Small Business Investment Company Program seeks to stimulate and supplement the flow of private equity capital and long-term loan funds to small business. this program is mostly geared towards businesses that have been in business for a while. The program, the SBA through this program licenses privately and publicly managed investment funds that raise capital from private investors. The SBIC invests this combined capital in qualifying small businesses through terms established between the SBIC and small business. If you are a small business seeking these types of funds, they typically service later stage, as I said before, mature, profitable businesses that are generating cash flow sufficient to service interest and sometimes principal payments. SBI financings to small business typically range from $2.5 million to $10 million. However, each SBIC has its own investment profile in terms of targeted industry, geography, company maturity, etc. And the type and size of financing the SBIC will provide to small businesses. If you are interested in the possibility of receiving capital from SBICs, please reach out to me directly. I can give you more information. But as a starter, you should first identify and investigate existing SBICs that may be interested in financing your company. So in other words, do some research first. Use the directory, which is available through the SBA, as a first step, and learn as much as possible about SBICs in your state. You should also know that they can offer you management services appropriate to your needs. Only companies defined by SBA as small are eligible for SBIC financing. So that's it, guys, in a nutshell, as far as loans available through service by the SBA, as far as this, as designated by the SBA as being funding, quote unquote, funding for small business. It is, as I said before in episode 1, the whole federal funding space can be very complicated, convoluted, difficult to understand. But in this series of videos, my goal is to break it down and simplify it for you so that you as a small business know whether you are in the market for procuring a contract, getting a loan, or any of the other funding options, which I will cover under different U.S. government departments, such as the USDA, U.S. Department of Commerce, U.S. Department of Energy. All of those departments have they have money that are designated for particular small businesses. And to use the USDA as an example, particularly in rural communities. So those I will go into a little more detail in episodes 4 and 5 for you. So I hope you got some information that you can use, as far as procuring funding for your business. Because as you know, on this channel/broadcast, the goal here is to really address the issues facing small business and to provide solutions. And of course, one of the main issues plaguing small business and is the biggest contributor to small business failure is funding. So I'm hoping by breaking down the possibilities and opportunities in terms of funding for small business, this will be of help to you. So thank you again for tuning in to the School of Small Business. You know what to do. Share the video to someone you know who's in business or starting a business, thinking of starting a business, that this information might be valuable for. So thank you again for tuning in, and hope to see you next time in the School of Business. So until we meet again, be well. Thank you.